Good morning, everybody. Welcome to the morning volatility report. It is I, Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, welcoming you to, let's see, Monday morning, January 9th. It's the first week of January is already gone. It's hard to believe. Anyway, starting on the 17th, our Vol Masterclass. You want to learn how to trade volatility? This is the place. We're going to go through all Vol basics, all VIX futures, understanding different levels of volatility, what it means trading, also how to trade the vol products. So every class is going to give you a way to trade volatility depending on what's going on in the market at any particular time. VIX is low, VIX is high, term structure is this, term structure is that. Whatever's going on, that's what the class is going to teach you. So there's going to be a takeaway from every single class that we have. It'll be 10-week class, starts on the 17th. If you're already an OptionPit subscriber, it is at a greatly reduced cost. If you're a new subscriber, it's going to cost you money. All right, so check it out on the website. With that, speaking of volatility, we have a little weekend markup today, and VIX is higher mostly on a weekend markup. SPX is down a little bit. I think mostly because the financials looked a little weaker this morning. Goldman Sachs is actually down. We'll see how long that lasts. Technology, that we'll talk about that in a second, but what I want to point out is, where is VIX? We did trade the 10 handle. We could see that again. It looked almost like Friday. I think we bounced a little from there, but it is entirely possible we get back to that level. Okay. So if with that, hold on here, somebody popped on and they are not muted. I hear noises somehow, some way. All right. Anyway, if we see, again, we'll look in our chat room today for a little bit. We'll look at some contango plays. I think there's something setting up for February for the vol products. We'll discuss that as well today. But the market still isn't moving, okay? Realized vol is still ultra low. One thing easy to keep an eye on now is how low the vol gets, because when it gets this low, it gets a little bit squirrely, okay? I want to show you vol of vol here, right? All right, you're getting a little funky markups. I don't know how real this is. Let's just take a look at that Feb vol, okay? Let's see how, if this little bid picks up. Again, I think it's mostly just weekend affected marks. It got marked down a little bit at the end of the week, and it's marking back up again. But if it starts to spike, that's something to keep an eye on. All right. Another thing to look at too is look at all the volatility and how cheap, let's say in like XLV is. Okay. Whoops, XL. What is that? Technology spider. Mark the technology spider symbol. I can't remember it. XLK. That's right. God, I'm getting old. Anyway, so again, volatility here. You can't remember the technology symbol. Nobody's surprised by that. Okay, but again, take a look at how cheap and how low volatility is in this stuff, right? So the cheapest way to get long, again, a 2-year chart of volatility, just very, very low. And it's a good opportunity, I think. I swear, sometimes the market's like this, you just buy calls. Maybe look at Apple, Facebook, stuff like that. But that's what we've got. All right. And with that, I will see, we'll option build back on our normal schedule on Thursday. All right. Thanks for the assist, Frank. All right. Bye-bye.